Don't ask them, what do we know? What I forgot is better than whatever they remember.
Welcome back to Delta Code. I'm Delta, an economist with over 20 years of investment experience, and I'm here to share my insights and my investment process with you. Today, I'm going to cover the recent developments in the stock market and crypto, what has been happening this year, and what to expect for the earnings next week. I'll cover some of the earnings, some big earnings from the previous week, as well as one of my biggest positions that will report next week on Thursday, which is Coinbase. So let's get into it. So this is the S&P 500 heat map, and we can see in the last day there have been some developments based on the earnings that were reported last week. Some of the big tech companies, primarily Tesla, and who else reported last week? Alphabet and Microsoft, Intel, Snapchat, Roku, Spotify. Those are last week's. And let's see what happened. 1 week performance. Meta went down a lot because even though they beat top and bottom line, the expectations they set for future quarters is that they plan to spend a lot on AI. And the market did not like that. Google went up, Amazon, Nvidia, as always. Meta saying they're going to spend more on AI just means they're going to buy more chips from Nvidia, AMD, and all the other ones over here in the semiconductors. Now, in contrast to Meta, that reported better than expected earnings and profit, but guided that they will spend more money. Tesla, however, missed a lot. They reported a lower earnings than expected, and honestly a terrible quarter. But the stock went up because Elon hyped it up quite a bit. Here are some quarterly metrics for Tesla. You can see that vehicle deliveries were steadily rising, hitting the peak in Q3 of 2023 and Q4 2023, which was last year. There was a lot of incentives, tax benefits, and then they went down. I'll do a more detailed analysis on just Tesla and how their financials look like. But this isn't, one quarter does not a trend make, but it does seem like they've peaked and are rolling over. The free cash flow right here is really concerning. And Elon even said that they plan to spend, I think, $10 billion this year to advance their fully autonomous self-driving, which requires buying more chips from Nvidia. And we can see here income difference between Q4 and Q1 is huge. Q1 is looking like, Q2 of 2021 over here. So doesn't look good. I don't know why the stock went up. Elon has a way of hyping people up, but I think this should have been a sell event personally. Now, Meta, I think, should have been a buy the news event here because they reported earnings that were better than expected, and they're integrating AI into their suite of family apps. So if you open your WhatsApp, your Instagram, your Facebook, they're putting their AI everywhere. And I even used their AI today in WhatsApp as I would use ChatGPT, and it was pretty amazing. If you think about it, Google knows your intent. When you Google for, let's say, used car, they know you intend to buy a used car, for example. Facebook has your psychoanalytic data, which they know about what you like, how you interact with different content. They now know you better than your family knows you, better than your parents, better than your partner. With just a few likes, their algorithms know you really well, and therefore they can sell you better, knowing your psychological profile. Using AI, now they're encouraging you to use them as a search engine, which tells them your intent as well. They've done this also with Marketplace, where if you're searching for used things on Marketplace, it kind of tells them what you're looking for. So now they have the psychological data, and they will have more intent data. Both of these will, I think, eat away from Google. So any searches that are performed on Meta's family of apps are not going to be performed on Google, and they will take ad revenue away from Google. So I think this is bullish in my opinion. Meta is my second biggest position after Coinbase, and I will consider adding if there's even little more weakness. Now, Meta is still up for the year to date. It's still up 25%. I did a big purchase when it was around 300. Most of my shares are probably around 120. But at 300, when I saw their latest launch with Ray-Ban and Oculus and all these things, I bought the dip, and it has paid off so far this year. I think this pullback is not warranted. Tesla, I think this is a warranted pullback. So, though full self-driving is amazing idea, not really yet. Next up, a company that I have been keeping an eye on and started acquiring is Intel. Now, you know me, I believe AMD is a far superior processor and GPU company. But Intel is a oldie and a goodie, and they just received billions of dollars in the CHIPS Act from the current administration to build fabrication facilities in America, because we do not want to depend on Taiwan semiconductors because of the tensions with China and possibly losing that source of chip manufacturing. The United States is shelling out billions of dollars to bring manufacturing to be built in America. One of the beneficiaries of this CHIPS Act is Intel, who received, I think $8 billion at least to build a plant in Arizona, which should be producing chips in 2025, and this will start adding to their revenue. So I acquired some options for Intel for 2025 and 2026. Given this pullback here, based on them missing their revenue numbers and having bad guidance, I will consider adding more, purchasing more shares, and buying more options, long dated 2026, as long as I can. When their Arizona plant comes online, I can see their revenue quickly increasing and the stock price doubling. Next week, earnings that I will pay attention to. SoFi, this is a fintech company. Amazon, AMD. Obviously, AMD, I think, is a great company that's going to benefit from the AI, though possibly overvalued at the moment. Amazon also is going to ride the AI train and benefit from more data and more compute being used with their AWS. Etsy, Fastly, and Qualcomm on Wednesday. And then Thursday is the big event for our portfolio, which is Coinbase. Obviously, Apple also reports then, so does Block. But our portfolio is largely Coinbase. And if you follow the channel, you know that my forecast for Q1 is about 60% greater than what most analysts expect. So I expect the price to move significantly on Thursday and Friday. In that expectations, I purchased several options that expire in mid-May. So it gives us a couple of weeks for the market to digest the news. Now, guidance for Coinbase is the biggest risk factor here. For Q1, if I'm correct here, and I think these are conservative numbers, but let's say I'm spot on, and it's $1.6 billion, and the market's expecting 1.1. That is, 50 to 60% better than the analysts expect. Earnings per shares, instead of being, 50 cents, will be closer to $4. So the stock should move positively. Now, if the company guides that Q2 is going to be weaker, then the shares, the price of Coinbase shares might not move as much, might even pull back if the current price has priced some of this in. I don't believe they've priced this in because most of the expectations are 1.1. But guidance might be weaker than we expect. Currently, I expect guidance to be for 1.4 billion in Q2. So about maybe 10% weaker than this quarter. They have plenty of time to make this up, but the way Q2 has started with April looks to be slightly weaker than, how it looked like in Q1. Possibly only 10% weaker, but that 10% can be made up by base, layer 2, derivatives, and other subscriptions, because taxes were done probably by most people in Q2 in April, last minute, subscribing to Coinbase One, which is $30 a month, as well as base layer 2 had most of its usage at the end of Q1 and start of Q2, and is now one of the biggest layer 2s on Ethereum, earning Coinbase fee revenue. And derivatives from Coinbase, as I mentioned in my article here, derivatives are crushing it. At the time of writing, they had $54 billion in just 30 days of revenue. So Coinbase had a recent pullback from the top here in March of 270 down to 206, 208. I was fortunate to pick up some options at this time. I don't always call a local bottom, but this was fortunate for me. And now it looks like it's swinging back up into the earnings. Probably will be in this range next week. And then after the earnings, I expect them to shoot probably past 300, maybe 350. If my forecast is correct and guidance isn't too weak. But let's not focus just on Coinbase, no matter how much we want to. Let's look at SoFi, Amazon, AMD, and maybe even Apple to see what to expect. SoFi is a solid company. You might have received marketing from them to refinance your loan, to help you manage things, personal loans. Right now, their numbers aren't looking great nor terrible, though short interest is pretty high. So if the earnings are positive, possibly shorts will look to cover. With the interest rates going high, I don't see their business improving until interest rates go down slightly. Now, interest rates are better for them because they get to charge higher interest. Not as many people take out loans when interest rates are high. Now, oldie and a goodie on Tuesday, other than Amazon and AMD, is Pinterest. Now, Pinterest used to be one of my favorite apps. If you never used it, it's a way to collect pretty much visual content, videos, and images, and create boards and save them for later use. Now, if you can see my art behind me, I'm quite a visual person. I love to paint, and Pinterest is a place where I get a lot of inspiration for my art, for tattoos, for clothes, and there's a lot of useful intent data they have to better market to you based on what you save on your boards. Now, their revenue could be better. Their stats are looking terrible. They have good operating margin. They have $3 billion of revenue, which is okay. They're seeing good revenue growth. Net income could be better. They have lots of cash on hand and no debt. Low short interest. So one thing they could improve on is their daily active or monthly active users. 500 million isn't a lot. That's probably a little better than Twitter, I think. So, and the data I think is better than Twitter's. They used to have a lot of ads, and I've stopped using them because it got annoying. But I checked it out today in preparation for this video, and it looks like they clean up their user interface. They're spamming less ads. So I think it's a good company. They could use some more innovation on their platform, maybe add more video content. But overall, solid. Look for a income to improve and their revenue to grow. For that, they just need to grow their monthly active users. So hopefully they'll be able to execute there. Now, Amazon and AMD also report on that day. And if you look at Amazon, it's pretty much double since this time last year. It went from 180, dropped down to about 80, and now it's recovered back to 180 into the possibly, a no-brainer Magnificent Seven company that will benefit from AI and overall inflation. Now, I've been a big fan of AMD since it was $8 to $12. I'm a fan of their product, their CEO. They're executing well. I think the PE is a little high at the moment, but AI is really hot, and this is one of the only competitors to NVIDIA that can take market share from them. Now, the shares have seen a pullback from above 200 to about 150, and possibly will retrace back up after this earnings if they deliver and guide up higher. I can't imagine them not blasting through revenue and giving even higher guidance for rest of the year, given how hot the semiconductor industry is at the moment. Now on Wednesday, we have Qualcomm, Carvana, Fastly, and Etsy. Let's take a look at Carvana. It was one of the companies I recommended because it was heavily shorted back over here. When it was 40 and 50, it's shot up to 80 cents then when they delivered earnings in February. Now, I can imagine them having had a good quarter. I have been using Carvana myself lately, car shopping. I think it's the best way to buy a car, and it's pretty straightforward. They just deliver it to your house. You can buy your insurance there. You can get financing. They just offer everything from A to Z and make it streamlined and digitally friendly. So I can see them growing and shooting past the expectations. One awesome thing that is still on the table is the short interest. The short interest is 31% of float, 24% of shares outstanding. This is pretty high. I think it was about 40 when I last covered this. So some shorts have covered, but this is still pretty high. So if Carvana delivers on their top and bottom numbers, top and bottom line, and guides higher, they can just crush these shorts. And interest rates are still going up higher, so it may cool off the used car market. Used cars may fall down in price as they have been falling, which eats at their margins. Something to be aware of. And lastly, Apple, pretty much at their all-time high. It's about 200, pulled back to 170. I'm not a fan of Apple personally. I tried not to use any Apple products. I am allergic to their brand. It just rubs me the wrong way. I think their Vision Pro was a dumb product, overpriced product, and they realize that themselves now. I think Meta's headset is superior for 1/7 of the cost. So I don't know who buys a $3,500 headset that is not as good as a $500 one, just because it has an Apple logo on it, I guess. Additionally, Apple has been sleeping on the AI train. They are in talks with OpenAI and Google to use their AIs. They have so much data. I don't know how they missed the AI boat. Let us quickly cover crypto. Crypto markets are in neutral in the fear and greed index, market cap of 2.3 trillion. Bitcoin is sitting just above 60,000 at 63, and Ethereum is at 3,200, looking to break out as one of the majors, seeing a 3.4% increase in the last week, the highest of the top 10. Looks like Tron and Near protocol have also seen gains in the last week. Near is one of our new additions to our portfolio. This is a AI play and a blockchain abstraction. I brought this up before several times. Grayscale Ethereum Trust ETH is now at 24.5% discount. This may be one of the best trades in crypto or traditional stock market, because if and when the Ethereum spot ETF gets approved, this discount will be zero. But also, Ethereum will appreciate if the spot ETF gets approved. So you will both get this free 25%, which is more like 28% on the way up, and the appreciation of the hype for the ETF. May has a few deadlines for the SEC to either approve or deny the Ethereum spot ETF. Also, several companies are preemptively suing the SEC in their aims to make this happen even sooner, or assuming that the spot ETF will be denied. Now, most of the industry does not believe that the ETF will be approved, just based on SEC's interaction with people that have filed. This doesn't mean that the probability is zero, but it's likely very low that it will get approved in May. Some of the current price action that is positive for Ethereum might be people speculating that the ETF may be approved. Now, if it does not get approved, which most likely it will not, that doesn't mean it will never get approved. It just means it won't be approved in May. There will be another date set for later in the year, and several lawsuits will likely follow to force SEC's hand to approve the Ethereum spot ETF, as they did with Bitcoin. Inevitably, I believe that the spot ETF will be approved, and I'm not the only one. Larry Fink, the CEO of BlackRock, also believes that the Ethereum spot ETF will be approved eventually. Now, BlackRock is already an avid user of Ethereum blockchain. They've launched their treasuries on Ethereum on a stock symbol ticker named BIDL, which is borrowed from Ethereum's community. Play on words on the word build. Much like HODL is a play on words for hold on. Based on what I'm seeing in the market, I am looking at weakness in Tesla, Intel, possibly Carvana to add to my positions, and to open or add to my Coinbase options strategy, expecting a very volatile earnings report on Thursday. Thank you for tuning in. Don't forget to like and subscribe to stay up to date with latest investment insights, as well as my analysis of earnings reports on these big tech companies, especially Coinbase next week. I also publish articles and blogs on Substack, check it out. I just published an article recently called Crypto Tulip Mania that will give you insights of how crypto markets work, why you shouldn't believe news media when they overhype or exaggerate bubbles in crypto, as well as how to use certain friends and family members as signals of top and bottom of the market. Thank you for tuning in, and as always, may the force of compound interest be with you. Peace.